This week was a trap-filled roller coaster. On the surface, BTC looked like it might finally break out of consolidation, especially with those strong daily hammers early on, but price just kept coiling, waiting, then boom, Thursday and Friday gave us the drop. Now, was this week predictable? Honestly, yes and no. The structure gave us some clues, like the trade by design reversal pattern on the 4-hour time frame, but at the same time, we had the daily time frame printing large bullish hammers, pointing to a possible breakout higher. So we had mixed signals depending on what time frame you were watching. That made this week tricky. The lower time frames kept us guessing, throwing out fake signals and trapping early entries, all while macro news piled up in the background. It was one of those weeks where the market made you second guess every setup. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified every time we upload a new video. In today's wrap up, we're breaking down Bitcoin's price action day by day. I'll walk you through how we handled the volatility using the TBD system. We'll also dive into the macro chaos and Jared's blog post in plain English, Annie's Tuesday altcoin TA, which is still valid by the way, the Gridbot MasterClass drop, and some impressive wins from the TTC community. This video is for educational purposes only. I'm not here to give you exact entry and exit, but hopefully you'll pick up something new or get that light bulb moment that helps you nail your own entries and exits more confidently. Let's get into it. BTC opened the week stuck in 4-hour consolidation. No breakout, no breakdown, just sideways chop. But Jared flagged something big in Discord on Sunday, a week full of high impact events. He said, buckle up, be prepared for volatility, and he wasn't wrong. Here's the quick summary of what was coming. Monday, we had treasury updates that could shake bond yield. Tuesday, labour and confidence data with surprise potential. Wednesday, GDP job numbers and treasury funding, all before FOMC. Following on from that, we had FOMC rate decision and commentary, always market moving. And Thursday, PC inflation data, usually priced in. Friday, NFP job reports and new month capital flows. The takeaway, too many catalysts for price to stay quiet much longer. Now back to the BTC charts. Jared had given us the heads up on all of the news events that could cause volatility and also gave us the heads up to expect the unexpected. So back to Monday's price action, we have our false move week beginning to the upside, followed by an M formation from dead gap zone into the Asia session. That M pattern was a big early clue that price might not break out after all. If you follow the TBD system, you know that the dead gap zone is a highly manipulated zone because the Asia session has not yet opened. But the real warning signs came from Jared's blog post that dropped that day. It was one of the most important macro updates we've had in weeks. He pointed out how the market is in a weird phase right now, ignoring major risks like tariffs, bond market imbalances, and even political threats to the Fed. Think about that. The current Fed Chair Powell might get removed. Trump reportedly referred him to the DOJ and toured the Fed buildings. While that might sound dramatic, it's not just noise. The Supreme Court recently ruled that agency heads like the Fed Chair can be fired without cause. That would throw the entire financial system into chaos if it happened. Jared also explained how the volatility is being mispriced. The VIX is low, which means on the surface, the market looks calm, but the cost of downside protection is still high. That tells us institutional traders are preparing for something big. They're quietly hedging while the headlines stay quiet. He also mentioned Japan and how a potential leadership change there could shake global bonds and forex markets. If Ishiba steps down and Japan moves towards more stimulus, we could see sudden moves in yields and the yen. So if you're wondering why price feels dull but tension is high, this is why. Behind the calm, smart money is preparing. This blog was a reminder the charts tell part of the story, but macro tells us when that story might change. On Tuesday, BTC bounced, but only to give us another lower high before turning back down. I shared my weekly setup chart, which is the 1-hour time frame, in Discord, saying this wasn't the kind of structure we long from. And if you were going to take a long, it would have to be a quick scalp or day trade. I mentioned from the low of the week I have 2 rises. However, there's a chance rise level 3 doesn't happen. If we get weakness or a reversal pattern on the lower time frame in the marked area of interest, this would provide a short entry. And this was the chart at the time. However, I want to show you why I wasn't leaning towards a rise level 3 for the 1 hour time frame, because something subtle but important happened that day. If we go back to Monday, BTC actually created a new low below the point where rise level 2 had started on the 1 hour time frame. That small move might have gone unnoticed if you weren't paying attention to the structure, but for us, that's the kind of clue that shifts our bias. It's the first signal of a potential change in market structure, and when you see that, you can't keep forcing the idea of a rise level 3. You have to adjust. Now at the same time, Annii posted a chart in Discord that added even more weight to that idea. She pointed out that the W we were working with didn't meet all the requirements where the market maker show up 3 times on the inside right side of the W. There was also no break of the 50 EMA with volume on the 1 hour time frame. She also mentioned that she's not seeing a typical false move week beginning trap because the wicks are even, so there's not really a clear trap traders zone. Conclusion: price can beat it, and this is her 1 hour chart here. When we talk about rise levels, ideally we want price creating higher highs and higher lows where bullish market structure remains intact. This is where the levels increase in price. The other way we can see those rise levels happen is where we get sideways rise levels, where price is just creating equal highs and equal lows. But what we wouldn't expect is when price gives us a W, a rise level 1, a rise level 2, and then gives us a new low. This is the point where you would be cautious and be open to not getting a rise level 3 and start to pay attention for a lower high, because this is going to give you a confirmed change in market structure. So when we come back to price action, you can see that we got something more like the red structure here, where we have the imperfect W, rise level 1 and a rise level 2, and then price came back to create this low here. And when price breaks that structure, we have to respect that something has shifted. From here, our job is to wait for confirmation. If price retraces and gives us a lower high, that confirms the structure break. And from that moment on, we stop hunting longs and begin looking for shorts. And this is where we bring it back to basics. Simple market structure, one of the most important parts of the TBD system. Now the next step is finding your area of interest. And if you have too many options, you choose the one with the most confluence. For example, we have 3 vector candles to choose from here. If you pulled a fib from the peak formation high to the new low, you can see price retraced back to that golden pocket area and wicked straight off the 78.6. We also found weakness in our area of interest, and price closed as an inverted hammer on the 1 hour time frame. If we zoom into that zone on the 15 minute, we see that inverted hammer as well, and this ends up being our trapped traders zone, where traders open long positions before the candle has closed. Price then pulls away, makes an attempt to repeat the level, fails, and that essentially gives you a multi-session M from UK into US session, giving you a clean entry for a short position. That hesitation and structure aligned with Annie's YouTube live stream later that day. If you haven't watched it yet, go back and do it because it's packed with gems and the altcoin setup are still valid. In this video, she covered Sol, Tau, QNT, INJ, XCN, Verge, Pingu, all mapped out on the daily time frame. She talks about why this isn't a real alt season, just a US narrative driven move, and how smart traders were already taking profits on Ethereum. If you trade alts, it's a must watch. She also gave us a teaser. Something big was coming on Wednesday. Now Wednesday was one of the busiest days of the week. BTC continued to coil, and then came the Gridbot Masterclass reveal. If you've ever struggled with choppy ranges, this was for you. Multiple members are now running bots after that session. One of our members, Cryptones, mentioned how they spent over 3,500 learning grid trading elsewhere and still called Annie's session the best they've ever seen. One bot returned 41% in 8 days, and another nearly 15% with minimal drawdown. Now whilst BTC was consolidating on Wednesday, I shared a ribbon setup in Discord on CAS showing a clean 3-to-1 risk to reward opportunity. Now you had to be fast on this one because the entry presented within the next hour, and if you didn't catch it, then the risk to reward wouldn't have been worth it. So this was a textbook example of using structure and confluence. This trade was based on the ribbon scalp strategy heading into the UK session on the 5-minute time frame, looking for a bearish rejection of the yellow ribbon confluent with the low of the week, stop loss covering all ribbons should the entry present, targeting the 4-hour 200 EMA. No bearish rejection, no entry. So this was the idea, and this is how that trade played out. Perfect retest off the ribbon, stop loss above the EMAs covering the low of the week as well, which is a bonus, and our target got hit, giving us a quick 3-to-1 risk to reward in a matter of an hour. If you're wondering what the ribbon strategy is, there is actually a full breakdown of it for free on the Trade Travel Chill YouTube channel. You don't even have to be a member of TTC. Just type ribbon into the search bar of the Trade Travel Chill YouTube channel and you'll find a full walkthrough. I'm not going to go through the whole thing here, but it's definitely worth checking out if you've ever wanted to understand how to build structured entries off the EMAs with proper risk to reward. And from here we also saw BTC complete another drop post FOMC. Also this week, SilverWolfs dropped part 2 of his altcoin review on Injective Protocol, INJ. It's one of his personal top picks, and his breakdown focused on why INJ could be gearing up for something big. Without giving away the whole blog, here are a few standout points. Injective just launched its EVM testnet, meaning Ethereum style dApps can now run natively on Injective's layer 1. That's a huge step forward for developer adoption and real DeFi use cases. There's talk of a staked INJ ETF application being submitted, which, if approved, could open the door to institutional money flowing into INJ. And Injective just played a key role in tokenizing a 1.3 billion ETH treasury, showing it's not just theoretical. Real TradeFi players are already using it. SilverWolf also gave a quick TA update showing INJ is up around 60% in the last 3 weeks and shared some areas to watch if it retraces. If you're in TTC, definitely read the full blog. It's packed with alpha. If not, this is just a taste of the kind of deep research our members get access to every week. On Thursday, BTC printed a large indecision candle with a large wick to the downside, giving hope yet again for another move to the upside. However, there was no follow through, and instead we flushed out again and completed another drop. So this is the part I was referring to at the start of the video where I mentioned price was a little bit tricky this week, and the reason it was tricky is because yes, we had some down moves throughout the week, which is what we wanted, but by the time we got to Thursday, price had essentially made its way back to our resistance area. So even though we had movement, we were basically back where we started. Price had been ranging all week, and Wednesday bullish daily candle close at a glance can look bullish. And when price is sitting right back at the high of the day, or even just near a key resistance level, it creates this moment where you have to ask yourself, is this where price pushes higher and breaks out? But that's where volume becomes key, because if we were truly going to see a breakout to the upside, we'd want volume to start building from the lower time frame and then speeding up into the higher time frame. That's how you know the move has conviction. But if you look back at the volume on Thursdays, there was nothing. The move might have looked dramatic, especially on the daily time frame with the large wick to the downside, but the volume just wasn't there. There was no strength behind the move. And once you recognize that, it changes how you interpret what's on the chart. Now let's break down how the sessions played out. During the UK session, price came up and took out Asia's initial high of the day. In doing so, it spiked the liquidity sitting just above, repeated the previous high of the day level, and then pulled back against the move. That right there was your liquidity grab. Then the US session came in and tried to repeat the level, but failed. This gave us a multi-session M formation. And this is where things start to fall apart. Despite this move here being the large daily wick to the downside, when we dropped to the lower time frame, there was no volume pushing price higher. There was no follow through. Instead, the wicks began turning to the upside, telling us there weren't enough buyers to sustain the move. From there, price drop came back into our low of the week level and continued building bearish market structure. On the 15-minute time frame, the 50 EMA was acting as the dynamic resistance. Every time price tried to pop, it got rejected cleanly off that EMA. Eventually, price broke through our key low of the week level, confirming another drop through here. And again, the 50 EMA capped the pullback, showing us that the structure was holding bearish. Now here's where it gets interesting. This drop that took out the low of the week also cleared the 7-day and 1 month liquidity pools sitting just below. And that is this bright yellow section you can see on my high block chart. And some may have thought, okay, this is it. We're going to bounce from here. Let's start looking for reversal patterns. However, when you apply the model we trade, if we go back to our M formation and start to count the drop, we have a drop through here, another drop through here. So we should be expecting one more drop. Throughout these moves, there were no clear reversal patterns, no W's, no V bottoms, half Batmans, trapping volume formations, nothing. And instead, we followed through and got our drop level 3. From here, this is where we see a W formation. This does not invalidate the daily bullish thesis, but intraday, this was a liquidation flush. Even with all the chaos this week, our community stayed locked in, and trust me, the wins they pulled off are worth shouting about. Pete nailed shorts on Link and Ethereum after Cajun's UK call, then did it again on a second exchange. Dina flipped a scalp into a Colombian style bag flip, essentially meaning she closed her long position, realized those profits. When she got the reversal, she opened a short. Nice one on that one, Dina. Bradley posted his July results, up 11.29% for the month with a nearly even split of wins and losses. That's the power of a solid risk to reward. And Cajun Spice pulled a clean lineup longs and shorts on Annii, ADA and BTC across multiple time frames and came out green. This is what we love to see. Traders using the model, following structure and sharing the journey honestly, whether it's wins, losses or breakthroughs. If you need somewhere to place your trades, consider checking out WEEX. It has a super clean layout, but what makes it stand out is the ability to open multiple positions on the same asset in the same direction without merging them. That means you can manage each trade separately, no averaged entry, no confusion. Plus, when you create your account using the link below, you unlock VIP2 trading level, which is the equivalent to a 25% trading fee discount. I've also dropped a full tutorial on the TTC YouTube channel. It walks through every tab, both spot and futures, so if you're new to the platform, it's all there for you. Now with BTC giving us a multi-session M formation from UK into US session on Thursday and giving us another 3 drop levels on the 15-minute time frame and giving us a W reversal pattern which formed the low of the week over the weekend, the question remains, is this it before we push higher, or is this W going to fail, give us a lower high and we continue lower? If you've been watching these breakdowns or this channel and you're still trading alone, come join us inside TTC. We have 2 membership options to choose from depending on where you're at in your trading journey. And if for any reason you don't find value in it, we offer a 48-hour money back guarantee, no questions asked. Our members get access to structured trading education, macro updates, live calls, psychology coaching, and a community that's winning and learning together every single week. You've seen the results, now come be part of it. More than likely, price action has made some significant moves by the time you're watching this video. But that's exactly why this breakdown exists. Not to predict every candle, but to show you how the model played out and how we traded it inside TTC. This video here is to help you build context, recognize structure as it forms, and see how the strategy adapts to evolving market conditions. This isn't about hindsight. It's about skill building, spotting structure, reading sentiment, and understanding session behavior, so you're always one step ahead. And if you're in TTC, take the time to go through Annie's GridBot Masterclass and the GridBot course. And if you want to be ahead of any major drops, updates or events like this, consider grabbing yourself a membership by using the link below. We'll see you inside.